How we doing, everybody? I'm Tom Worley with Liberty Realty.
And I'm Pete Melchior with Pinnacle Mortgage.
And we're here tonight with our Client Appreciation Pie Party. We like to try and take something off of our clients' to-do list for the holiday season. So we like to pick up a pie for them that they can bring to their family's house and wherever they're going for Thanksgiving. But what we'd also like to do is talk to you about as you begin to shop for the holiday season with Black Friday coming this week and even Cyber Monday, right? The importance of how your credit score and the choices that you make now are going to affect you down the road when you either try and purchase or refinance, and how your credit cards, and let's face it, people are going to pay for their Christmas presents on credit cards. So our job, my job as a realtor, is to make sure that I surround you with the right people who can properly educate you on how that's going to affect you, which is why I like to bring Pete in to talk to my clients about how their debt will affect their ability to get a mortgage. So Pete, with Christmas season coming up, what can we tell our buyers, whether it's their first time buying or their 10th time buying, exactly how the debt and their credit cards are going to affect their ability to get a mortgage down the road or even in the near future?
All right, Tom, there's a few factors when it comes to credit scores. The first is, let's start with risk-based pricing. So when you are applying for a mortgage or going to get a mortgage, credit scores are heavily impact the rate that you will get on your mortgage. The better the credit score, the better rate that you're going to get. So the credit bureaus, when you are shopping this holiday season, they like to see that you're at least carrying, it's called your debt to limit, and they want to see it's about 40%. So if you have a...
So what is a debt to limit? For somebody out there that's hearing the debt to limit, what does that mean on a credit card?
So if you have a limit on your credit card of, say, $1,000, they really don't want you to carry more than about a $400 monthly debt on that particular credit card. Anything after that starts impacting your credit scores, which will make your credit scores go lower, which will eventually hurt your interest rate and make your interest rates go higher. Okay. All right. And then the second big factor in the holiday season is credit inquiries on your credit report.
Okay, so the credit inquiries. So what you're saying is, as nice as it is to possibly get that interest-free credit card for the next 18 months from Best Buy or Marshall's, maybe we should limit our choices there and make sure that we're actually being smart about our choices on those ones that we pick. So talk a little bit about the credit inquiries that we need to worry about.
Yeah, absolutely. So obviously every store you go to, they want to entice you to open up a store credit card, $25 off or 10% off, whatever it may be. Each time you do open up one of those cards, it is an inquiry on your credit report. And the more inquiries you have on your credit report, potentially the worse your credit score will get, which will also impact your mortgage rate when you are going to apply for a mortgage. So my advice would is to stick to 1 or 2, 3 credit cards that you do have where you could get, earn miles or cash back. Stick with those cards. Try to avoid the inquiries on your credit report, and that will help with your mortgage rate.
Okay. So we talked a lot about the credit and everything else. Now, just a quick rundown. What is considered a good credit score, or good credit score versus an average credit score at this point?
Basically, anything over 740 right now is considered excellent credit.
Okay.
Considered the risk-based pricing by Fannie and Freddie Mac. Most banks, even local banks, everything's rates are derived from the credit scores. It's very rare these days you do see credit scores over 800, but you do see them. But yeah, anything over 740 is considered an excellent credit score.
Excellent credit score, so we're looking at anything over 740. So what about that 700 to 740 range? Is that kind of the average? Where are we looking at for averages?
Yeah, I say average. You're probably looking at anywhere between 720 and 740. And then also it depends how much you're putting down on your house, which will also impact the rates.
Okay. So the long and short of it is Pete and I like to talk about making sure that you have a proper team in place who's going to guide you through the process from offer to close, right? So that includes your credit score. So this holiday season, if you or somebody else is thinking about buying or selling in the near future or sometime in 2019, have them call me, and we'd love to make sure that you guys are guided through this entire process.
Also, one quick point, Tom. Right now, rates are still at historically low rates. The average rate over the last few decades are about 8% is the average rate over the last about 30 years. Rates right now are still under 5%, mid to high 4s. So if you do need to do that debt consolidation right now, there's plenty of refinance options out there for you. Especially, you don't even have to have a ton of equity in your house right now. As long as you have some equity, you're still able to refinance and not pay the credit card company the 23.99%, but you're still looking at somewhere to the mid to high fours right now.
All right. So whether you're thinking about purchasing new and buying that new place or even refinancing, give us a call. We're here to help. And if you or somebody you know is thinking about moving in the near future or refinancing, keep in mind we're never too busy for your referrals. Everybody have a great Thanksgiving. Enjoy the holiday no matter where you're going. Happy holiday, guys.
Happy Thanksgiving.